Assalamu alaikum. This is Mohammad Kalim Khan, faculty member, Faculty of Management Science, ILMA University. Today it's our lecture number 4 of Principles of Accounting. In today's lecture, we'll discuss about bank reconciliation statement. Content of this lecture are as follows: kinds of bank account, kinds of checks, reasons of differences in company's record and bank record, reasons of dishonor of check, error by the bank, by the company, accounting treatment of differences, or practical question and answers. A bank reconciliation statement should be defined as the summary of banking and business accounts that reconcile a company's bank account with its financial record. The statement contains a record of all deposits, withdrawals, and other financial activities with the bank over a period of time. It is a useful tool to control fraudulent activities. Bank reconciliation helps to identify errors that can affect tax and financial reportings. It also helps to identify and further prevent frauds. Kinds of bank account. Kinds of bank account are current account. This account is suitable for businessmen who are very often in need of money for making payments. In this account, the customer is authorized to deposit or withdraw money anytime in or from the bank. The bank does not pay any interest, rather it charges from the depositor its services, which are called incidental charges. The checkbook is issued to the customer and can be withdrawn money anytime. Number next is saving account. It was introduced by the banks for those who have low income and small savings. This account enables small savers to save and earn income on it. The customer is entitled to withdraw the money twice a week, and if the account amount exceed a certain limit, then the notice in writing given to the bank. Saving account holders are allowed to withdraw not more than a fixed amount in month through limited withdrawal from this account. Moving forward to fixed deposit account. In this account, the money is deposited for the fixed period of time by the customer and banks safely advance it in the loan and earn profit. At the time of opening the account, a slip is given to the customer and money is repaid on the presentation of the same slip on the expiry of the period. The rate of interest varies with the time for which the money is deposited. Longer the period, higher the interest, vice versa. If the customer want, if a customer wants to withdraw money before the fixed time period, he have to surrender the interest for the expired period, or he can get loan against deposit from the bank. This account is suitable for those persons who can save money for some times and want a higher interest rate. Number next is profit and loss sharing account. The deposit accepted in these accounts are invested in different productive channels. Payments to depositors is made on the basis of profit and loss as the case may be. So, no concept of interest is involved. Considerable interest is shown by people in these accounts, and so far a large number has been deposited in these accounts. Next one is home saving account. In this type of account, the bank supplies saving box to the depositor to enable him to drop small savings into it from time to time. The box is taken to the bank periodically where the amount is taken out from the box and credited to the customer's account. Okay, moving to the next slide, and there is kinds of checks. Kinds of checks are bearer check, order check, uncrossed or open check, cross checks, anti-dated checks, post-dated checks, and stale checks. Now we'll discuss these checks in detail. Bearer check. The word when the word or bearer appearing on the face of the check are not cancelled, the check is said to be a bearer check. The bearer check is payable to the person specified therein or to any other else who presents it to the bank for payment. However, such checks are risky. This is because if such checks are lost, the finder of the check can collect payment from the bank. The next one is order check. When the word bearer appearing on the face of the check is cancelled and when in its place the word or order is written on the face of the check is called an order check. Such a check is payable to the person specified therein as the payee or anyone else to whom it is endorsed or transferred. The next one is uncrossed or open check. When a check is not crossed, it is known to be an open check or uncrossed check. The payment of such check can be obtained at the counter, over the counter of the bank. An open check may be bearer check or an order check. The next one is cross check. Cross check means drawing two parallel lines on the face of the check with or without additional words like ENCO, account payee, non-negotiable, etc. A cross check cannot be encashed at the cash counter of a bank, but it can only be credited to the payee's account. Anti-dated check. If a check bears a date earlier than the date on which it is presented in the bank, this is an anti-dated check. Such check is valid up to the 6 months from the date of the check. Post-dated check. If a check bears a date which is yet to come, it means a future date, then it is known to be a post-dated check. A post-dated check cannot be honored earlier than the date on the check. Stale check. The check is presented for payment after 6 months from the date of the check. It is called stale check. A stale check is not honored by the bank. For company, bank account is an asset. An increase in asset is recorded as debit and decrease as credit. So whenever company makes deposit in the bank account, recorded as debit in the company's book means cash flow. And whenever withdrew from bank, recorded as credit. While customer bank account is a liability for the bank. So increase in liability recorded as credit and decrease are debit in the bank record. When the customers deposit amount in the bank recorded is as credit in their records, means bank statement due to increase in liability. And in case of withdrawal of amount from bank account by customer, bank record is as debit. Moving forward to the reasons of differences. The differences between cash book and bank reconciliation statement can be arise due to the following reasons. Number one, uncleared checks. Checks deposited into the bank but have not yet been cleared by the bank because the check was under clearing process. So this check is added at the end of the day when making a bank reconciliation statement. These type of checks are added in bank statement. Outstanding checks, checks written by the entity that have not yet cleared by the bank. The next one is unprinted check. Unprinted check issued by the companies to supplier but have not been presented to the bank for payment. These type of checks are subtracted from bank statement. The next one is direct deposit by customer. Customer made direct deposit into the company's bank account which have not been entered in the cash book. So when making a bank reconciliation statement, we will add direct deposit by a customer in our cash book. Charges, any type of charges, bank charges, let's say bank charges deducted from for the service rendered by the bank, and the charges are also deducted from cash book. Postgraduate checks are also a reason of discrepancy. Checks which have been written by the drawer for a date in the future. The next one is standing order. Type of pre-authorized payment under which a account holder instruct a bank to pay a specific amount directly from his or her account balance to a named party on a regular basis. Standing orders are used typically for recurring fixed amount expenses such as insurance premium, mortgage installments, and subscriptions, and are cancelable at the account holder's option. Deposit in transit is the next one. Checks that have been sent to the bank but do not appear on the latest bank statement. They are called deposit in transit because the most recent transactions are not posted by the bank. Return check. A check which is not paid by the bank when it is presented for payment. Not usually because there is not enough money in the personal account to pay to the to make payment to the check. Some errors may be incurred from both and from companies and or from bank end. Interest income. Bank provides interest on different type of account for depositing money in bank. This interest is treated as income in company's account. Interest on overdraft. Bank charges interest on overdraft. This interest is recorded as expense in company's book of account. Dividend income appears in the bank statement, and dividend represent a portion of the corporation's earning which is paid to the shareholders. Then dividend is received by the bank on behalf of a company. It is recorded as income in the company's book. Zakat deduction or any kind of deduction. Bank deduct zakat from different accounts at the rate 2.5% per annum. Withholding tax is also a source of discrepancy in company and bank account. This tax is levied on the withdrawal of cash from the bank account by the customer. Now let's discuss the reasons of dishonoring a check. Why a bank returns a check unpaid Reason number one, insufficient fund. When the amount written on a check is more than what the drawer has in his account in the bank will return the check marked NSF. Death of the drawer numbers next. If the bank receives information of the death of its customer, the bank will not honor any check presented on account of the dead customer until further notice. Difference in signature. If the signature of the drawer differ from the specimen signature in the bank, the check will be returned by the bank. Non-existing account. Sometimes a false check is presented to the bank for payment. These false checks are returned by the bank at the time of the payment. Bankruptcy. If one is judged by a law court to be unable to pay his debts in full, the bank will dishonor any check presented on behalf of the customer. Frozen account or account stopped. If court orders or a military government declares that some people account be frozen, the bank must definitely dishonor all the checks bearing the account number because stop count transactions are not allowed by the banking staff. When there is alteration in apprentice of the check. If anything is cancelled on a check, the bank will dishonor such check except the drawer sign his signature above or under the altered word is allowed only. Post-credit check. If any check of the future date is presented for payment, the bank will dishonor such check. Similarly, spell check, a check that has been delayed for more than 6 months of the date written on it, if presented for payment, must be dishonored by the bank. Difference between word amount and amount in figure, amount in words and amount in figures. If, for instance, the drawer written rupees 30,000 only in words and rupees 20,000 in figures, this check will be written by the bank. Payment is stopped. If the drawer asks the bank not to pay a check already issued, the stop payment checks are not entertained by the bank. Moving forward to the errors, usually these type of errors are made by the bank. We'll explain each type of error and let you know the treatment by the accountant. Number one, deposited check into the bank of rupees 12,000 but wrongly recorded by the bank as 21,000. This error was made in bank. Error made by the bank. This error increases the bank amount of the company by rupees 9,000. The treatment should be less from bank statement rupees 9,000. The next one is deposited check into the bank for rupees 20,000 was wrongly credited by the bank as rupees 2,000. The bank credited the company's account by 2,000 due to which bank balance reduces by 18,000. This error should be treated as add in bank statement rupees 18,000. Withdrew from bank 1,000 but wrongly recorded by the bank 10,000. Bank deducted 10,000 which results decrease in the company's bank balance by rupees 9,000. Treatment should be done as add in bank statement rupees 9,000. Withdrew from bank 32,000 but recorded by the bank as rupees 3,200. Bank debited rupees 3,200 which results increase in company's bank by rupees 28,800. Treatment to this error should be less from bank statement rupees 28,200. Number next, bank record or error wrongly charged to the company's account as rupees 1,000 instead of the other company. Bank wrongly deducted 1,000 which results decrease in bank account amount of the bank account of the company by rupees 1,000. Add in bank statement rupees 11,000, 1,000, 1,000. This should be treatment of the error. Bank wrongly credited company's account by rupees 2,000 instead of the other company. Bank wrongly credited 2,000 which results increase in bank account of the company by rupees 2,000. This should be subtracted from the bank statement, or 2,000 should be subtracted from bank statement. Now, these are some errors that can be similarly made by the company. Company can also make the following errors. Error number 1, check issued to supplier for rupees 10,000 was wrongly recorded in cash book as rupees 1,000. It means that rupees 1,000 is recorded in cash book for payment instead of 10,000, which results increase in the cash book balance by rupees 9,000. Treatment should be done as less from cash book rupees 9,000. The next error, check issued for purchase of computer for rupees 23,000 recorded as rupees 32,000 in the cash book. Rupees 32,000 is recorded in the cash book on payment side instead of 23,000, which results decrease in balance of cash book by rupees 9,000. The treatment of the error should be add in cash book rupees 9,000. The next error, check deposited into the bank rupees 45,000 but wrongly recorded in the cash book as rupees 5,000. Rupees 5,000 is added in bank account instead of 45,000, which results decrease in cash book balance by rupees 40,000. And this should be added in the cash book as rupees 40,000. Check deposited into bank rupees 3,000 but recorded in cash book as rupees 30,000. Rupees 30,000 is added in cash book instead of 3,000, which results increase in balance by rupees 27,000. And this should be treated as less from cash book rupees 27,000. Bank charges or rupees 1,000 recorded twice in cash book. Rupees 30,000 is added in cash book instead of rupees 3,000, which results increase in the balance by rupees 27,000. Bank charges of rupees 1,000 recorded twice in the cash book. Double recording of expenses decrease the cash book balance by rupees 1,000. This should be added in the cash book. Direct deposit by customer. Direct deposit by customer rupees 4,000 recorded in cash column of the cash book. Direct deposit should have been recorded in bank column of the cash book. This error reduces cash book bank column balance by rupees 4,000. So add cash book by rupees 4,000. So these were the common errors made by bank staff in bank statement or by company staff in the cash book. Accounting treatment of differences. The accounting treatment of differences while preparing bank reconciliation statements are summarized in 4 slides. The items that have to be added in the bank statement are uncleared checks. They are also called unrecorded checks or last day deposit checks or late deposit checks, checks deposited but not shown in bank statement, deposits in transit, any error made by the bank which result decrease in the balance. So these points, these type of uh, differences will be added in bank statement. The items subtracted from bank statement are unpresented checks, outstanding checks, missed checks still not presented for the payment, or check issued but not shown in the bank statement, or any error made by bank which results increase in balance. So will be subtracted from the bank statement. The items should be added in the cash book are note or bill received by bank as per instructions of the account holder. Number next, interest on note or bill received by the bank as per instructions. Number next, interest credited by the bank or anything credited by the bank that is not yet recorded in the cash book will be added in cash book. Number next, dividend collection by the bank as per the instructions or any amount of profit received by bank as per the instructions. Very important, direct deposit by a customer into your account or error by company which result decrease in receipt side or increase in payment side will be added in the cash book. Moving to the next one, next difference that will be subtracted from cash book are note or bill paid by bank as per instruction of someone, interest on bank, interest on note or bill paid by the bank as per the instructions, account interest debited by the bank or anything debited in the bank account will be subtracted from the cash book. Any amount or liability or expense paid by bank as per instructions. Any type of deduction like zakat deduction, any type of charges like bank service charges, collection charges, dishonor charges, or post-dated check charges, any type of charges will be deducted from the cash book. Dishonor checks written by the bank unpaid if bank is not paying the amount, is not crediting the amount, the account, the check is called dishonor check. So the dishonor checks are also subtracted from the cash book. Or markup or tax, any type of tax deducted from the cash book will be subtracted from the cash book. Deducted by the bank will be subtracted from the cash book. Error by company which result increase in receipt side or decrease in payment side. Bank overdraft. Bank overdraft is a loan made to a customer with a check account at a bank in which the account is allowed to go into debit, usually up to a specific limit. Cash book shows the bank overdraft as credit balance in the cash book, while bank statement shows bank overdraft as debit balance in the bank statement. Bank overdraft is the negative balance of the bank account. Have a look at the example. Comparison of cash book and bank statement of Mr. John, a sole trader, reveals the following for the month of April 2014. Balance as per cash book, debit balance means positive balance, rupees 17,000, and balance as per bank statement, debit balance means negative balance, it is 23,000. Direct deposit by customer 5,000. Number next one is a check of rupees 18,000 issued in settlement of an account was recorded in the cash book as rupees 13,000. The next one is uncleared check, unpresented check, and bank made direct payment for an outstanding bill for business. You are required to prepare bank reconciliation statement. Here is a solved example solution with explanation. Now I'm going to explain the solution. $23,000 is negative balance of the uh, passbook or bank statement. Number one, bank account is an assets of the company. Assets are normally debit balance. Cash book shows that the bank account has a debit balance. It means it is positive. Rupees 17,000 is a positive amount. For banks, customer account is a liability and liability has credit balance. Here bank statement shows a debit balance, which means negative balance of rupees 23,000. So it is written as in brackets. Customers, the next one is customers directly deposited into the bank has been recorded by the bank but did not recorded by the company. So it will be added by the company as increase in the bank account by rupees 5,000. Next transaction, a check was issued for rupees 18,000 but wrongly recorded as rupees 13,000 in the cash book. This error increases the bank balance as per company's record. To rectify this error, rupees 5,000 will be deducted from the cash book as to decrease in bank account. The next one is unclear checks, and unclear checks are added in the passbook. Simply check deposited but not cleared by the bank, it will be added in the passbook, rupees 37,000. The next one is check issued but not presented to the bank for payment. It will be deducted from the bank statement by rupees 7,000. The next one is bank paid outstanding bill on behalf of the company but did not recorded by the company. So it will be recorded by the company as deduction from the cash book of rupees 10,000. So this is the end of our lecture of bank reconciliation statement. Thank you very much.